So welcome to agriculture. I have been working in NatCat for the last 8 years and now in agriculture. I'm never happy when it rains, but now actually there was a drought risk in northern Germany and in Poland. And now there is rain, has rained last night, and we will have probably a good yield. It was the good moment, so I was happy with the rain. So that's new. What we will talk about now the next 20 minutes, more about Eastern Europe, more about agriculture insurance. And the name is The Winding Roads, and the road has been quite winding for Swiss Re. The years behind us has not always been successful when it comes to agriculture insurance in Eastern Europe. And I just want to share some insights with you and also share some ideas with what could be done better and maybe afterwards also discuss about that. So the agriculture team of Swiss Re Reinsurance, it's a dedicated team. We have 6 offices, the main office being in Zurich. We have 30 people working on agriculture reinsurance. We work very close with clients, with governments, and we have a product innovation center. With this team, we are the biggest reinsurance team in the world. We are market leader in many countries, but not in Turkey. If you are, for example, a broker in this room, this is my 10 seconds of marketing. If you have a good risk in agriculture, please come to us. We can help you. So what I'm planning to do today is I want to take you on a road trip through Eastern Europe. We will go quite far. So we start in Munich, where we are now. Then we go down Slovenia, we go to the Balkans, we go to Turkey, Romania. Then we drive all the way to Kazakhstan. And then we even go further. We have a look at China after that. And on the way back, we cross Kiev, we have a look at Ukraine, and then we end up here in Munich. This, according to Google, takes us 280 hours, so have the clock ready. I will try to speed it up a little bit. It's funny that Google can do this. It calculates every street where we have to go. We would need such a route planner for our business. This would be good, and we know where we're going. Before we can join the road trip, so I want to just go through some prerequisites which we have for companies before we decide to work with an insurance company, before we enter in the agricultural business. So important things that we look for. And I think it's just a scorecard, basically. So you don't have to be super in everything, but you need to have at least a certain level. So before going into agriculture, your company must have management buy-in. The management must think, yes, agriculture is a thing we want to do in 5 years, in 10 years from now. We don't want, okay, we try it and then we step out, we step in, we step out. Management must be convinced. There must be alignment of interest. So often the agriculture business is used by property or by banks to sell banking products, to sell insurance for the tractor or for the farm. But then the crops is just like to get the farmers in. There need to be knowledge about risk inspection. There need to be knowledge about underwriting, so to decide what's a good risk, what's a bad risk, what's a good price, what's a bad price. Then what we have heard, 2,000 loss adjusters. This is an excellent number. There are companies with just 1 or 2. So Turkey is a very good example. Very important. It's a very complicated process for a vineyard or for maize or for a cow. What is the loss? Is it 10%? Is it 20%? Is it 100%? Then some administrative IT capabilities, not just to have papers somewhere under a desk. We also see that. A sales network, diversification, so capacity management, to know not to insure all the grapes in Bordeaux and nothing else. This is stupid, right? So one storm in Bordeaux and there will be huge, huge losses. So better spread, have a good balanced book. And then local experience in agriculture. Know the farmers, know the local experiences. So this, if you want to join on the trip, this is approximately a scorecard or however you want to call it. So let's start the trip. Are you ready? Yeah. Boom. There we go. So we start in Slovenia. So here is the winding road. It's a brilliant image of a nice country of Slovenia. What we have learned here is So there were, when the business started to grow in the years 2000 to 2009, average loss ratios were around 120, 140. And then after quite some work from the local companies, the local experts, also from our side, the portfolio got bigger, better diversified, better rates, better deductible definitions. The products improved, and then actually we had now 4 really quite good years in Slovenia. And then the company and other companies, they now start to move also in the other parts of the Balkan. And now the funny thing is, these companies in these other countries, they work totally independent from the mother house. So they make the whole same mistakes again. So the first lesson I want to share with you is, what we would like to see more of is like an agriculture strategy for all the bigger players in Europe, so being it, I don't know, Generali, Allianz, Vienna Insurance Group. It's always, you have a property team, and there is one guy doing agriculture. And he's doing that on his own. And then there's one guy in Poland, and there's one guy in Slovenia, and there is one guy in Ukraine. And they all act as independent agriculture underwriter. And these companies, I mean, I don't want to say they're not doing a good job, but it would be much more effective, and it would be much better to avoid a lot of mistakes made in one country in the next country, to work as, at Swiss Re we have a special lines team, we call it. So we have 30 people, and I talk with my colleague in Chile, and I talk with my colleague in Japan. Okay, the fishes in Japan, what diseases do they have? What nets do they have? And like this, you share, and the mistakes that you make in one country, you can avoid by better working together. Let's move on. The bell is close. Romania. Romania is also quite special, so it has a huge potential agriculturally, being at the technology level of the people, a lot of agriculture engineers, they have good lands, they have quite good climate, but on the insurance side, it's not going so well. Maybe here, there is one product, basically, hail product. There is a fierce competition on this one hail product. Everybody has the same product, and the only way to compete is on service and on price. The service is so la la often, the price is going down, down, down. Even if there is a loss year, loss ratio 150%, what's the decision? Let's lower the price. So for drought and freeze, which are actually the main risk drivers for the farmers, are not covered. And even if there is EU subsidies on levels of France or Italy, not much growth. So we analyzed the situation and came to conclusion, the farmers just don't see the goal. It doesn't help to have the hail product if your losses come from drought. Why should I buy a hail product? So what it needs is innovative product that help the farmer. I mean, it's so obvious, but we have been struggling now 7, 8 years in Romania, big loss ratios. Basically, all companies in Romania are suffering, or not suffering, but the results are not very good. Shall we move on? Next one, our, wie sagt man auf Deutsch, Paradebeispiel. I don't know, anyone in English? Very good country. So there is public-private partnerships since, I learned now, 2004, correct? 2006? 6, okay, correct. There is sound legislation, there is effective organization, there is a well-diversified, balanced portfolio, balanced. So many fruits, many animals, fish. Really, if there is a loss in the west, the south is doing good. If there is a loss in the south, the north is doing well. A high penetration for Turkey. I don't know if this is the exact number. 14.5. Okay, so 16, I'm not too far off. But this is for Turkey, this is a super result. Also, if you look at the premium growth we have seen before, this is super.
And the combined ratio.
Also very good. Good protection for the farmers, but not yet drought, but this might come. And there is fierce competition between the reinsurance. So what did we learn here? If agriculture insurance is set up well, there is actually not much need for reinsurance, and it's a very effective way. So basically, Swiss Re does not even participate in the TARSIM program, and the ones that participate, the reinsurance hardly make any money. So basically all the money stays in Turkey, mission completed almost, I would say. So not much for us to do. Also not the ideal world, of course. Yes, but you get back what you pay, so it's a good balance. Then Kazakhstan. The idea of Kazakhstan, there also is a pool, quite similar motivation and ideas as in Turkey, but it's differently implemented. So, of course, there is less diversification because the country is one steppe with a lot of grain. There is no risk selection allowed because it's compulsory, so the insurer cannot say, but that's a crap risk, I don't take it. So they have to take it. There is no reinsurance in place, and also the loss adjustment is a big problem just because of the size of the country. Before you are there, it's just very inefficient. And then what we see in Kazakhstan is actually that the other lines of business, being it engineering or property, there is better developments. So, and there is no pool. So here, actually our lessons learned is basically a poorly set up PPP. It more hinders the development of good agriculture reinsurance than that it really helps, because nobody, the farmers, they don't like insurance at all, and for the next 5 years it will be really difficult to come up with, to win back trust, because it just doesn't work. That's conclusion. Also, there was no money left anymore to pay the claims. There are some provinces that have loss ratios of 500%. So you should not make agriculture there at all. But still, the uninsurers have to insure these crops. Yeah, so difficult situation. Let's move on. So are you tired already? We're now near China. So in China, this is the most interesting insurance market currently for Swiss Re. So the biggest growth, biggest opportunities. Also, very active we are. There has been a large growth in agriculture, 2008 till 2013. There is a good protection for the farmers. Also a balanced portfolio. China is a huge production, many crops, also again with animals and fishes and rice and anything that we cannot even think about eating, they produce there. Then there is a large government involvement, so there's premium subsidies, there is a loss cap where afterwards the government pays, the government sets the original rates and the terms, and the government is even involved in the loss adjustment. So the government is really running it, but as always in China, they're running it well. Then there is a fierce competition also here on the reinsurance side, so it's not a heaven for any reinsurance that thinks now, hey, this is the market where I have to be. It's not free money. Now the down part comes, so the China Agro Reinsurance Pool was set up in 2014, and then it was decided by the government that 50% of the premium have to go through this pool. So basically the work that Swiss Re had been doing to also grow this market, now it's cut into 50%, but who knows, maybe they say next year 90%. It's very insecure. So the next lesson learned is too large dependency on the government is also a big uncertainty, because the government can just pull the plug and it's all gone. All the work that you've done, the office that you set up, all the experience, it has been done for nothing. So we reached the furthest point, so we are going now backwards. Ukraine is a very interesting country also, huge potential agriculturally. It has the best soil in the world. It has a super good climate. It has excellent agriculture engineers. They have schools from Soviet time, which very smart agriculture people, which really make good seeds and everything really, really good. but they are stuck a little bit on the political side. I don't have to go into detail there, I think, but the country is in a crisis. Also the insurance market, there is no subsidies, but farmers do buy insurance. The farmers, the 2 hectares, they laugh about, right? A small farmer there is 1,000 hectares, a big farm is 10,000, and a super big farm is up to 500,000 hectares. It's really amazingly big. And these people, sometimes they're also on the stock market, so they also interested in every year payout to their shareholders, and then they do buy insurance. So there is a lively competition, there is good development of local experts. We also have to say that in the last 10 years in Ukraine there was no big disasters of drought or freeze. So the real big test of how this whole system works will come when there is a big freeze event or a big drought, to be seen. So here, lesson learned is, yes, we're all very positive, but with agriculture, we only, and of course also with earthquake and flood, we only know how good the setup of our system is in the bad years, and also how good was our reinsurance. We know that in the bad years, it's very nice to all be happy after 10 good years without drought and say, yes, we are great. But we will learn it when maybe the yield will drop to 60 or 70%. This is then to be seen. Also, the further development, of course, of Ukraine has to be seen. This brings us back in Munich, so welcome back. I hope you enjoyed the trip. So what did we learn during this trip, this 280 hours? First thing is, it's not easy. So just to say Eastern Europe, Central Europe, this is a place to make easy money as a reinsurance, it's not the case. Then there is a historical reluctance to buy insurance by the farmers. So they don't trust anyone that from a financial institution, they don't like it. So there need to be products that meet the needs of the farmer. There need to be products that the payout should not be every 20 years. Of course, also not every year. It should be something in between, right? We discussed that yesterday about the deductible and the sub-limits. The insurance must be able to prove that he pays. On the other hand, it can also not be that you pay every year, because then the whole idea of insurance is gone. There must be a trust and understanding, and this comes down really to the most important point, a trustful partner with the right spirit, expertise, and network. I think this is key. Some companies works very well, and then another company which looks very similar, in the end, the cooperation does not work so well. So it's really, the right people and the right idea about growing the business, working together with the farmer, with us, with the loss adjustment, with the government, and this works. For example, Turkey, very good example. Last thing we learned, only in bad years, agriculture reinsurance is tested. So maybe one anecdote from my boss. He has to go to the board from Swiss Re. So how was the year? It was very good there and there and there and there and there and there, but, and then every year there was a but. So for example, a drought in the US, the year after there was a tornado or a hurricane in South Korea, the year after there was African swine fever in Latvia. So it is this unknown knowns, or like there is always something unexpected going on, and this makes our results like, then you have 15 good years in a country, and then there is one spike, and everything you earned is gone. So the margins are really small. It will stay a fascinating trip. I mean, we like to work in reinsurance, agriculture. It's very interesting. Anyone that works in NatCat or in modeling, I would say, if you're interested, it's a lot of also big data and satellites, and it's really fascinating. And the last thing I want to say, my wierujem v naš uspeh. We are convinced of our success in the future. With that, there is only the logo of Swiss Re left. Thank you.